Let's take a look at some information and charts on Uniswap for BraveNewCoin. So Uniswap is one of the OG DEX protocols. They are Ethereum maximalists through and through by the looks of it. So as opposed to expanding on different chains, new chains, bridging to other chains, they will expand on layer 2 solutions like Arbitrum and Optimism for Ethereum. We'll see how that plays out for them. It's a nice A/B test, I guess, between Sushi and Uni. Sushi, which incorporates any and all chains by the looks of it. And for the most part, the de facto UI has not changed across all the DEXs. Super easy to connect, interoperability extremely high. They have AMM pools as well that pull in huge volumes relative to even centralized exchanges. We'll take a look at the revenue in a second as well. They've announced a few different things on the blog lately. Arbitrum support, which I mentioned already, and then they just announced today an auto router, which may look to compete with 1inch and ZRX by the looks of it. All these DEXs will continue to compete against each other, and for the consumer, that'll mean quicker, faster, better trades, hopefully, as they discuss gas costs, better routes, things like that. Now we can look at TVL, we can look at the exchange token itself. Does any of it really matter? You know, that's the real thing. They have a token. What does it do? What does it mean? It doesn't have protocol revenue. They only have supply side revenue. TVL is kind of a silly metric anyway, because TVL will go plus or minus 5 billion in a couple hours based on incentives. And it's hard to track TVL on multiple versions of something, let alone multiple chains. Here, DeFi Llama does a pretty good job of aggregating Sushi, for instance, which is available on like 15 different chains. But there's Uni version 2, Uni version 3, Uni version 1. Collectively, those look like they add up to somewhere around 6 to 7 billion. So they'd be sitting slightly above Sushi if they were all aggregated together. Sushi has a lot of incentives on these various chains to bring TVL to the table, which is fine. But that's partly why Sushi's TVL increased rapidly. Now, I usually use DeFi Prime for volume data. I don't know why the 24-hour data I'm suspecting is incorrect, because when I look at the data recorded per day on previous days, Uni is still the de facto leader here, but when I look at individually, Uni is now fourth on the current day's volume. So I'm assuming this is the correct data here. Uni still by and large leading the rest of the DEX pack on a daily basis, and definitely on a monthly basis in the pink here. Uni far outpacing most exchanges for volume on pretty much every month you can look at. Maybe May. Sushi gave them a slight run for their money, but in general, most of the volume is happening on Uniswap. And here's where it gets a bit murkier, because like I said, they have version 1, they have version 2, they have version 3, they have version 3 on Arbitrum, they have version 3 on Optimism. So I don't have data ag on all this stuff, but the most important two to look at are probably version 2 with 5.8 billion TVL, version 3 with 2.4 billion TVL. Version 3 volume-wise is flat, transactions declining, users declining. Version 2 volume also flat, transactions also declining, users also declining. So it's hard to know if any of this matters, right? For like the token side of things, for the exchange side of things, for the DEX wars side of things. Does any of it even matter? Contract interactions down. I'm curious if they'll ever deprecate versions that are less popular, or if they'll just naturally fall by the wayside. As far as the layer 2 scaling solutions, the contract interactions are picking up. The users are picking up, but it's probably too early to even think about what that means. And as far as Optimism, TVL slowly picking up here, and contracts picking up as well, interactions. So probably because of gas fees, volumes are down on Uni, as well as just increasing competition between bridging chains or bridging enabled DEXs like Sushi. Now, if we look at the transaction counts and average transaction values have increased, transaction counts have declined basically to all-time lows. And again, for most of these tokens, you're probably not moving them around ever, really, realistically. They're probably just sitting in some wallet or on an exchange. You're not really going to do too much with them. Even still, if we are truly bullish here, I expect transaction counts to start to pick up. Active addresses basically at all-time lows as well. And again, I expect those to pick up if we are bullish. NVT is at all-time highs. I expect that to decline if we're actually bullish. NVT is an inverse metric of economic utility relative to price. So a rising or high NVT is bearish. What you want to see is a falling NVT. MVRV, same thing in the fill here. In my eyes, a better metric of market cap versus on-chain activity. For most coins, a 2x multiple is usually the top. We hit a 4x multiple in February. Price kept going where it topped out when MVRV was at 2.5 multiple. Currently, MVRV is 1.5. So it's probably too early to even use MVRV on this DeFi stuff. We just need more data to know what the highs and lows are. But in general, on-chain activity should be rising with a rising price. If on-chain activity is declining with a rising price, that's definitely a type of bearish divergence, regardless of what it is, even with these governance DeFi tokens, which most people don't move around anyway. Now, if we look at the revenue by protocol, that's where Uni really shines in the field, because in a 30-day sample, it's got 1.5 billion in supply revenue. Protocol revenue means it's baked into the contract itself, whereas supply side is just based on volume. So they lead their next competitor by almost 2x Aave currently. Now, if we look at market cap over annualized revenue, Uni's also on the lower end of this spectrum. This is also a multiple similar to MVRV. And in general, you want to avoid stuff that's not making any money, but has an extremely high market cap like synthetics. And you want to move into stuff that is holding a market cap similar to its annualized revenue. So Aave, Compound, Sushi, Uni, anything less than 10, I don't know, just making up a number here. I'm not a PE expert, but PE ratios are what's used in the legacy world, and this is the closest thing we can use for that on DeFi. But these two lending and borrowing protocols and these two exchanges look to be better positioned than everything else to the right side of Uni. Looking at Uniswap, Google Trends over the past 12 months clearly peaked in May, and declined basically to the depth lows. So again, if you're bullish, you want to see on-chain activity pick up, you want to see MVRV and NVT decline, and you want to see Google Trends start to pick up. You also want to see contract interactions, volume, all that start to pick up again. Flipping gears to technicals, we have the 50 and 200 EMAs, volume VPVR. There was a descending triangle / inverted head and shoulders chart pattern here as well. Previously, we had this ascending channel. So the chart's kind of a mess, but what it's all boiled down to is this range between 20 and 30, where the volume nodes are here. In general, how this works is most prices will hold between those levels until there's an impetus to move above or below them. So the forecast here is probably ranging until we're above 30 or below 20. The 5200 EMA is currently crossed bullish, so there's a bullish bias here, but there's clearly no trend per se on high time frames, just heavily ranging, and RSI is not really going to help you because it's neutral as well. Looking at the cloud, we're in the cloud, which again is another way of saying we're neutral. Maybe you could argue a macro inverted head and shoulders with a neckline at 30, but again, just look at the VPVR, right? If you're confused about chart patterns or don't know if that even qualifies as an actual chart pattern, the cloud is telling you 30 is a big level, VPVR is telling you 30 is a big level. If we are above 30 into mid-October, I think we go for all-time highs. I think potentially we go 50, 100, a 2x or 4x multiple basically from here, mainly just based on psychological support resistance levels. And if we look at the 4-hour MA multiplier, it's never really hit the 5x 4-hour 365 multiple. I was just kind of moving down the time frames to see if there's anything you can see here. There's just not enough data really yet to show anything significant. But if we assume this is a buy zone and we assume we're going to hit the midline here is basically around 80. We previously hit the midline in January 2021 on the 4-hour. This is going to move up rapidly with prices. So eventually, my guess is the midline is going to be around 100 by the time this thing actually gets there, if we move up, if this then that. So yeah, there's a lot of prognostication there, but this would be something that I'll be watching because as an oscillator, it's a good vantage point of telling you, are we overbought? Are we oversold? Is it a good buy zone? Is it a good sell zone? What are some levels to watch in the future? If this thing gets above 130, 150, 200, like, yeah, that's way, way overheated. So a 10x from here, I think is a bit much. 2 to 4x from here, I think is perfectly reasonable within Q4. So long as regulatory clampdown doesn't happen before the end of the year. Uni against BTC looks like a giant non-trend mess, potentially descending triangle, potentially macro head and shoulders, potentially even a micro inverted head and shoulders, right? There's a bunch of stuff, nothing super specific. RSI is all over the place. There's a lot of volume at 5K sats. There's a lot of volume at 2K sats. Trend metrics are telling you this thing is squeezing tighter and tighter and tighter into a bearish cross, but that doesn't mean you're actually going to see momentum off of that, because until we're below, say, 4,800 sats, until we make a new lower low or a new higher high, this thing's just going to keep ranging at this level here. So I don't think you get any help from TA per se here until we break out of this range. For me, there's no real trade to be had. And against ETH, Uni had a multi-month descending triangle. You can see the MA is flipped bearish. That was your first sign of trouble. This thing made a series of lower highs. It potentially even had this inverted head and shoulders, right? You can see the triple bottom here. Didn't matter. Didn't break out. Didn't break the 200-day moving average. Didn't break above the volume levels. And the horizontal eventually broke down. So in order for me to get bullish on this again, I either need to see a mega knife stab capitulation wick to the downside with a bull div, or I would need to see it hold a 5,200 bull cross again. And it looks like this 866 level, whatever that is in the ratio here, looks to be an important horizontal. Even in 2020, there was an Adam and Eve here, kind of textbook VU that we broke up from. So that's definitely the level to watch going forward if DeFi starts to get bullish again and DeFi outperforms ETH in Q4, which is perfectly reasonable. But right now, as we sit, this is not bullish by any means. Lastly, I'll just mention the ETH BTC fund and DeFi portfolio I trade for Techami Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC, or just watch what I'm doing. You can see everything, including AUM performance, allocations. You can see all the various vaults I'm in here on Yearn, Aave, and Comp. We're also holding Uni, lending it on Comp right now. You can also see the trades in the trades tab down below. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.